The price of Shiba Inu just executed a textbook reversal, bouncing off a critical support level that many feared would break. This isn't just a minor fluctuation, it's a crucial comeback that has triggered a massive buy signal across the market. Today, we break down the data behind this move and what it means for the future of Shiba Inu. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The last few weeks have been a period of intense pressure for Shiba Inu, as the broader cryptocurrency market experienced a cooling phase following a period of sustained growth. This downward pressure saw the price of Shiba Inu continuously trade below its main moving averages, establishing a distinct downtrend structure. The market capitalization of Shiba Inu had stabilized at approximately $4.9 billion as of December 12, 2025, with a 24-hour trading volume of $112 million. The key question for investors was whether the asset could hold a psychological and technical support level that has proven resilient in the past. This level, corresponding to a price of 800 units, represented the last major defense line against a deeper, more prolonged decline. The importance of this level cannot be overstated, as a break below it would have signaled a structural failure, potentially leading to a capitulation event. The entire community was watching, understanding that the outcome of this test would define the short-term trajectory of the token. The main news event of the day is the successful defense and subsequent bounce from the 800-unit support level. The price of Shiba Inu dipped close to this critical mark before a sudden influx of buying pressure reversed the trend. This bounce was not a slow, gradual recovery, but a sharp, decisive move that immediately invalidated the bearish momentum that had been building. This price action is a classic example of a spring or shakeout, where weak hands are forced to sell at the bottom just before a major reversal. The price quickly moved back up, establishing a new local low and beginning to print higher lows, a key characteristic of a nascent uptrend. This event is particularly significant because it occurred against a backdrop of overall negative technical indicators, where the 50, 100, and 200 exponential moving averages were all sloping downward and positioned above the current price. The bounce, therefore, represents a powerful countersignal, driven by fundamental strength and strategic accumulation rather than a simple, technical correction. The market's reaction to the 800-unit bounce was immediate and telling. While the price of Shiba Inu is currently trading at approximately 842 units, the psychological impact of the reversal is far more important than the modest price increase. The 24-hour trading volume, which was already at $112 million, saw a spike in the hours immediately following the bounce, indicating renewed investor interest and conviction. This surge in volume suggests that the buyers who stepped in were not small retail traders, but large-scale entities with the capital to absorb the selling pressure at the critical support. The short-term behavior of the market is shifting from aggressive selling to a phase of compression and consolidation. This compression is forming a shallow ascending structure, which is a sign of seller fatigue. The market is no longer experiencing panic exits, and the decrease in overall volatility suggests that the asset is building a base for its next major move. This price action has effectively saved the immediate uptrend, shifting the narrative from one of imminent collapse to one of potential revival. The most compelling evidence for the significance of this bounce comes from on-chain and technical data. The sentiment index for Shiba Inu remains in a state of extreme fear. Paradoxically, this is often a contrarian indicator, as major market bottoms are frequently formed when retail fear is at its peak. More concretely, the on-chain data reveals a massive accumulation spree by large holders. Over 8 trillion Shiba Inu tokens were erased from centralized exchanges in a single 24-hour period. This massive outflow, one of the biggest single-day exchange movements in months, indicates that whales are moving their holdings into self-custody wallets, a strong signal of long-term conviction and a reduced intention to sell in the near future. Furthermore, the daily number of whale transactions, defined as transactions over $100,000, has hit a 9-month high, exceeding 400 transactions. This intense burst of large holder activity confirms that the buying pressure at the 800-unit level was institutional or whale-driven, not a random retail fluctuation. Technically, while the macro trend remains bearish with the moving averages acting as overhead resistance, the relative strength index has stabilized in the neutral zone, avoiding the deep oversold territory that would suggest a continued free fall. The technical evidence points to a positioning phase, where smart money is quietly accumulating before a potential breakout. Analysts' opinions are now divided, but the implications of the bounce are overwhelmingly positive for the short to medium term. Expert commentary suggests that the successful defense of the 800-unit level has re-established a credible floor for the price. The massive whale accumulation, as evidenced by the 8 trillion token outflow from exchanges, implies that major players believe the current price range is undervalued and represents a generational buying opportunity. The primary implication is that the risk of a catastrophic breakdown has been significantly reduced. However, analysts caution that a true revival is still contingent on breaking above the declining moving averages, particularly the 50-day exponential moving average. The current phase is best described as a survival mode, rather than a revival mode, where the asset is building a strong foundation. The key takeaway is that the market has signaled a massive buy opportunity for those with a long-term perspective, as the fundamental support has been confirmed by both price action and on-chain metrics. The next major implication is the potential for a relief rally, with the first realistic upside target being a push toward the 50 exponential moving average, which would require the price to move to approximately 950 units. The Shiba Inu community, often referred to as the Shib Army, has reacted with a mix of cautious optimism and renewed enthusiasm. Social media and forums are buzzing with discussions about the whale movements, with many interpreting the 8 trillion token outflow as a sign of impending price action. Developer hints from the lead developer have also contributed to the positive sentiment. While not directly commenting on the price, recent cryptic posts and updates have focused on the continued development of the Shibarium Layer 2 solution and the ecosystem's utility. The community sees the sustained development and the reduction of exchange supply as a powerful combination. The narrative being pushed on platforms is that the current low price is a gift, a final opportunity to accumulate before the utility of Shibarium and the massive burn mechanism begin to have a more pronounced effect on the circulating supply. The collective mood has shifted from fear and uncertainty to a determined resolve to hodl and support the ecosystem's growth, reinforcing the strength of the community-driven project. The forecast for Shiba Inu is now defined by two distinct time frames. In the short term, the focus will be on the tightening structure and the potential for a corrective bounce. The immediate level to watch is the resistance at approximately 880 units, followed by the crucial 50-day exponential moving average resistance at 950 units. A clear break and hold above 950 units would signal the end of the short-term bearish structure and open the door for a move toward the 1,050-unit mark. The long-term forecast remains highly bullish, provided the current consolidation holds. The massive whale accumulation suggests a long-term target of zero removal, with some aggressive forecasts predicting a move to 1,500 units within the next 3 months and a potential return to the all-time high of 8,616 units within the next 2 years. The long-term trajectory is heavily dependent on the success of Shibarium adoption and the continued execution of the token burn mechanism. Investors should watch for an increase in volatility as the current compression phase is short-lived and a decision point is imminent. While the 800-unit bounce is a significant victory for the bulls, a balanced opinion requires acknowledging the existing risks and cautionary points. The primary red flag remains the macro trend, which is still negative due to the downward-sloping moving averages. The current price action is a short-term recovery within a longer-term downtrend. A neutral insight is that the market is in a positioning phase, not a breakout phase. This means that investors should not expect immediate fireworks, but rather a gradual buildup of strength. The risk is that if the price fails to break the overhead resistance at 950 units and instead loses the current consolidation base, a breakdown would likely result in another leg lower, motivated by apathy rather than fear. This scenario, where the market quietly fails, could be worse for the price than the recent aggressive sell-off. Therefore, while the buy signal is massive, It is a signal for strategic, long-term accumulation, not for aggressive, short-term speculation. Caution is advised until the major moving averages are decisively reclaimed. The market has spoken, and the message is clear. The 800-unit level is a line in the sand that the whales are determined to defend. This crucial bounce has injected a powerful dose of confidence back into the Shiba Inu ecosystem. The data is compelling, the accumulation is real, and the stage is set for the next major move. We will continue to track the on-chain metrics and technical indicators to bring you the most current updates. Until then, stay informed, stay strategic, and we'll see you in the next one. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.